Hey, hello everyone, and welcome to another weekly roundup. Ben will be giving us some updates on the US elections, macroeconomic news, and what we expect this week. Hello, Ben.
Hey Eva, how's it going today?
Good. I guess CrowdStrike has given the world a partial holiday.
I'd say that's a good way to look at it. I'm sure there's a lot of IT people pulling their hair out around the world.
Absolutely, absolutely. An interesting week. Let's start off with the political landscape. So, bold move by Trump in selecting Vance as his running mates. Any
hmm
insights?
Yeah, so it's a good question. Certainly, I think few people. There's one particular guy that I follow that thought Vance would be the selection, but I think it's a lot to do with the demographic he's trying to attract. Vance is 39, and if you look in the polls, Trump's been losing the younger vote, certainly as of late. And so I think he's trying to attract a little bit younger group population. Um, and, Trump grew up with a lot of money, and he grew up in kind of that lifestyle. And Vance grew up very differently. A single mom, addict, really different upbringing, Marine, really different personality into the mix here. So I think he's looking to hopefully, I think, moderate that. But Vance also had a lot of similar views, particularly from a perspective of what they want to do with Ukraine, what their views are around technology companies that are continuing to play an ever bigger part in the role of the U.S. economy. So I think they're aligned from a view perspective, but certainly bring in someone that's got a bit of a different voice. But as always, I think there are people that hoped he would bring in somebody that would challenge him, but
Yeah.
there's no way this guy's going to do that.
Interesting. Anything else in the political space?
So I'd say that was the biggest event. Certainly on the U.S. side. The other part, of course, is what's going on with Joe Biden. And so I think one of the slides will look at some of the metrics on what's happened there. But it really does appear that he's potentially changing his view and saying maybe I'll consider stepping down. So it's hard to know, but the ball seems to certainly be rolling in that direction where it's more likely that he's going to head out before the Democratic convention, which is coming up soon. So we'll see. That may change the narrative. Heard a few contrarian views this week that saying maybe this is peak Republican power right now, and the Democrats got a long time before the elections to kind of fix things and maybe give themselves a run into later this year. But lots of ground to cover there.
Okay. On the macroeconomic front, the ECB held rates unchanged. But on the other hand, Powell has hinted a likely rate cut. Any thoughts on this?
Yeah, so it's good points. ECB said that they're waiting for more confirmation that inflation's coming down. I think it's been a little bit stickier if you look at their numbers.
Yeah.
But yeah, I'd say they're going to continue to cut rates in Europe. Certainly, if you look at the health of their economy, it needs lower rates, particularly with the southern countries are under pressure significantly. But yeah, they're on hold. Powell, yeah. So Powell spoke. I think it was this week, right,
Yeah.
with Congress, where he talked and said all of the things that they're looking to and hoping to see, which is unemployment starting to rise, GDP slowing, inflation slowing, and coming towards its target. Would lead him to think that they're going to cut rates. So that September cut now is seems to be all but assured in the US. And then the speed at which that happens, I guess we're going to see. I think our guys say there'll be another 1 to 2 cuts after that this year, so potentially three this year in the US. and the bond market reacted a little bit to that so far, where we saw markets, bonds rally, we saw small caps rally, some of the tech names sell off, and some of that was to do with Trump, but some of that was to do with the economy as well. So yeah, I'd say they're leaning pretty hard towards cutting rates in the U.S. now.
Okay.
Yep.
Any notable earnings releases?
So not really anything that was super surprising. There've been a few of the tech earnings come out, and they're good, in line. I'd say to your point at the top of our conversation around CrowdStrike here, that is going to play a major part in what happens to the tech companies. But some of the, CrowdStrike was down 15% at the open this morning, but Palo Alto and some of the other cybers have rallied off of the back of this, saying there's potentially opportunities in the area. I'm not surprised because I know, from technology, I know when we get the Microsoft updates, we have issues with our internal systems as well. So seems like maybe things are converting a little bit too quickly right now, putting some pressure on those companies. But to answer your question on the earnings side, nothing material that jumped out at me this week.
Okay.
Yeah.
Any portfolio changes?
So no real portfolio changes, just happy to see the direction of some of the things that we've owned now for some times going in the right direction, with yields going lower, some of the consumer staples names that I mentioned, like the telcos and such, those have done quite well as rates come down. And certainly I've been talking about some exposure to small caps now for a while, and that's starting to work. So no material changes there at this point. I'd say slight positive that we've seen is we still are optimistic about what can happen to the Chinese economy and Chinese markets. And so we saw some news this week that they're going to put out, or they're going to stimulate the economy in the back half of this year, likely with Trump getting into the White House. We'll just say that's currently how it's leaning. The US dollar probably weakens in that backdrop, and that's good for emerging countries. So starting to think a little bit more about the likelihood of what happens if he gets in there, and what likely happens is rates probably go lower and the US dollar goes lower, and that has major implications in pretty much every other asset class.
Okay.
Yep.
Let's go to the charts.
All right.
Just share here for you.
Okay, perfect.
Let me know when you can see it.
Yeah, looks good. If you can just pop them up into like presentation mode.
Okay.
Perfect.
Okay.
All right. Want to just jump into the next one, please? All right, so this one is hot off the presses. So this is this is Canadian retail sales. So we're expecting retail sales to contract this month, but they came in a little bit worse than expected. So I think that consensus was minus 0.5, and we got a minus 0.8, which is quite significant. And so that further leans towards likelihood of what we've been talking about, which is further rate cuts in Canada. It's because we have that view that growth and inflation are slowing together here. So this report came out this morning, updated chart just to show you the contraction that's happened so far in the retail sales, and everything across the board, with the exception of auto sales, everything else besides auto sales was negative. So I think that's 8 of the 9 categories that they survey. And most of the provinces, with the exception, I believe, of Quebec, contracted as well this month. So that is hot off the press, and it will add some comments to the next slide. If we can just flip there, please. Yeah, so this is the view coming into Monday. This is the expectations for rate cuts next week for the Bank of Canada. So that number was in the high 60s, and so I'd expect with this retail sales number that came out today, I'm going to likely believe that probably moves up closer to 80% likelihood of a cut next week from the Bank of Canada. So we'll see. We'll get an updated report on that on Monday. And just as you note there, the Federal Reserve not likely to cut rates this go around, but expectation is that we see them cut rates in September right now. Super high probability. Same with ECB. That number will be updated with our most recent update next week. And I'd expect you see an ECB cut at the next meeting. But this one just passed and it was right. There is no increases at this point. So one of the nuances is just the differential between the Bank of Canada and the Federal Reserve. So we've had a few times in history where this has happened, where we've cut before the U.S. And so, right now we're 0.75, probably heading towards 1% below what the U.S. central bank's at. And so there is certainly concerns and worries about going too far. In the late 90s, I think we were 225 below the US, and that resulted in quite a major currency crisis of the Canadian dollar. So I wouldn't expect we go too far away from the level we're at now. And if the Bank of Canada does cut next week and we start to see cutting from the US central bank in the US, that gives, I think, Canada a lot of more comfort there and probably gives a little bit of breath to the Canadian dollar here. But we continue to see Canadian weakness, Canadian dollar weakness versus US temporarily. And so we'll continue to watch the spread between Canadian and US central bank. So this is just well, not just, of course, because it's a massive number, but this is the view of how much the US government now pays in their interest payments. So they just recently passed $1 trillion of carrying costs. So, I guess there's an overarching view, certainly from a media perspective, if you follow, the consumer is under pressure because their borrowing costs have gone up, but so is the government. So this is U.S. government. Their borrowing costs have gone north of $1 trillion now. So they have certainly lots of variables that they can control, and if rates get cut in half, their borrowing costs get cut in half as well, and that gives them a little bit of energy. So we'll see, but I think this is a big reason why rates start to come down, is because their costs have become significantly punitive for the health of the U.S. economy at this point. So if you look at this one, I think this is the last slide of the presentation today. So presidential expectations on the red line, of course, that would be Trump up at the top, with the view that started to accelerate at the debate and then had a bit of a spike there after the assassination attempt. And then what we also saw on the bottom part of this slide is we see the kind of the darker blue line with the lighter turquoise line being Kamala Harris. So it looks like she's significantly past Biden from an expectation of who would likely win if they ran head to head right now. If you look at that right now, you're looking at something in the neighborhood of 60+% for Trump to win, and then we look at something in the neighborhood of the 25-26% for Harris, and Biden is somewhere below 10% at the given time. So this will play a major part for what happens next from a Democratic leader perspective. But certainly hope to not talk about this each week, but it's a major part of what's going to happen in the U.S. Political landscape, and certainly have implications for Canada and the rest of the world. So we'll continue to watch this closely.
Interesting. Okay. What do we have for next week?
Yeah, so we'll have the Bank of Canada. We'll be watching on Wednesday. Earnings will continue to come out, and any signals for central bank change in the U.S. This CrowdStrike issue is still an issue. If we went, I was down to kind of talk to a few other businesses to see if they've been impacted by it, and the financial system in Canada. All the banks run CrowdStrike for their cybersecurity. and all the airlines. And there's a lot of issues that I think will continue to reverberate as we move through the weekend. So hopefully we come back next week on Monday and everything is functioning properly. But I mean, this is a major eye opener for the fragility that continues to build in the technology system.
Yeah.
And so that I'd certainly be watching. But I'd say from an economy perspective, at least for us here, Bank of Canada on rate announcement next Wednesday will be something we'll be watching closely.
Great. Great.
Yep.
Okay. Please don't forget to reach out to me if you need to have a meeting with Ben or if you have any questions or inquiries. Thank you very much for joining us and see you next week.
Thanks, everybody. Take care.
Bye bye.